Hi everyone, Dustin here, and welcome back to Operation Tradefront. I wanted to make this quick video about a strategy that I've been using for the past couple of weeks now. And I started out with a small account, as you can see, $500, or a small balance of my account, I should say. And I allotted $500 to it to trade to track this process because I started following what the SPY was doing, which is a smaller version of the S&P 500. And it trades similar to contracts, just like options would. And the thing that I like about the SPY, though, is everything is a dollar increments. So let me come over here to Robinhood real quick and try to find a stock like MasterCard, for instance, is a $300 stock, $366. But when you go to trade options on it, you can see everything is in $2.50 increments. Some stocks are in $5 increments and stuff. But the thing I like about the SPY is everything is in $1 increments. So it requires less collateral to be able to trade the options on it. So as you can see here, 351, 350, 349, everything is a dollar wide. So it multiplies it by 100 shares. So for each contract that you do, you have a $100 of collateral if you're doing the legs $1 wide. So a couple of things I wanted to track just real quick. I wanted to go over this and just show you. So I started out on the 23rd of July with this strategy, and that one went against me. And I keep notes over here, and I make little spreadsheets like this to track everything, and I'm constantly tweaking them and updating them. But on this one, the antitrust rumors for the tech companies and everything came up. Total loss on this one. I should have rolled these positions looking back now. I don't know why I didn't think about it, but I didn't. So as you can see, I took $19, it says is my profit right here, but I never got my collateral back. And that's the way I've set this up. So my collateral is deducted. So you can see I started out with 500. I collected $19 in premium. My collateral was $100. So my active balance was $419, and then my with a profit of $19. So it left me with $419. I never got my $100 collateral back because I lost it. The trade went against me. On this one here, you see I bought it back I sold this one for 10, bought it back for 69, and got my collateral back. So I had a total profit of $59, which then brought my balance from 419 down to 360. And then that closed out that Friday's trade there. And then on that same Friday, I put in another $100 trade. I sold the 319 and bought the 318. I collected $21 in premium, which brought my new balance to 381. So I'm starting off this challenge sort of in the hole because of that initial loss that I took. So as you can see here, within a week though, I'm back at $494. So this week was all green. Everything went the way it should. And then we get into the next week. So now in the next week, I'm back up. I'm up at 602. So now 2 full weeks and a partial week in, I'm up to $602. So I've had a $100 return on a $500 investment, or a 20% return. And again, all of these were green this week. So then when we get down to here, I had one, and my color codes, I use color codes for tracking purposes of my own. So I apologize if that's a little bit difficult to see on the screen. But this week everything went my way except for one. You'll see the ending balance on the 14th of August was $683. So I've made almost another $100 this week. On this one here, though, the Robinhood closed out this trade for me. They shouldn't have, but Robinhood will do this, and this is something to be wary of if you're doing trades on Robinhood. Robinhood will, I'm gonna fix this real quick. Robinhood will do things like this. They'll close out your trade if they consider it a risky trade on the day of expiration. If you're close to being in the money, or if the trade has a risk of going against you and you have a risk of losing your collateral and stuff, they'll close the trades for you if you don't roll them out before a certain time, which is generally somewhere around like 3 o'clock or so, give or take a few minutes. So this one they shouldn't have done anything with, but they did. This was my closer one here. I sold the 355 and bought the 334, so that you see the 333 and 332 were fine because the stock was around $335 and some change at this time. So they closed it out. I still profited $12 on the trade. I sold it for 21. They bought it back for 9. So I profited $12 on the trade. I would have much rather rolled it myself or something if it had been risky rather than them do that. But you can't control what Robinhood does. So then on the next week, the week of 17th through the 21st, all of my trades were green except for this one. And as you can see on this one right here, I took a bigger risk on this one. Bigger risk for a higher payout with the believed continued rally through Friday. And then that's the end of that note there. I rolled out to August 26th because it came back down into my strike price. So I rolled it out to another week, and we can talk about that in another video. But so this was the only one that kind of went against me. But at the end of this week, you can see I'm at $784 at the end of August 21st. So now I'm up almost $300 on the account over 3 weeks. And then starting into the week of the 24th of August, just this past week, the notes you can see here. So broke the individuals to trades. I'll cover that in just a second. Let me open this back up so I can show you what went on. When I rolled this one right here out to the 26th, I copied the same note down here. I just took off the date here because this is the one that I rolled. You can see here the 340, 339, 340, 339. This one expired on the 21st. This one expired on the 26th. Now, what happened here is when I took on these trades here, these were my normal trades for the day. Typically I trade 2 contracts on Monday, 2 on Wednesday, and then, or it could be Tuesday or Thursday, but on that day group. So the ones that I trade on a Monday expire on Wednesday. The ones I buy on Wednesday or sell on Wednesday expire on Friday, and then I'll buy one for Friday, sell one for Friday to roll over into Monday as well. So what I did here is I didn't take into consideration this one that I had rolled out to the 26th. And so both of these that I bought on the 24th expired on the 26th as well. So I ended up buying back the 340 that I sold here and selling the 339 here. So it wound up making it just a $300 wide collateral spread. So it took my 341 that I had sold and the 338 that I had bought. The 339 and 340 here and here canceled out. So that's what I notated over here. Broke the individual spreads because of the rolled trade from last week. With these 2 new trades, it broke the spreads and left me with 2 individual plays but 1 big spread. It left me with selling the 341 put and buying the 338 put. So instead of showing as 3 spreads, it's only 1 large spread, $3 wide. This could cause issues if it goes in the money. The reason being, my 341 that I sold and my 331 that I bought is a huge difference in the strike prices, or not strike prices, but the premium prices. So it would have been more difficult for me to roll it at that time. Now, thankfully, the stock or the SPY stayed up, and that was not a problem after all. But then you can see on the 26th, I put in those 2 trades to end on the 28th. On the 28th, I put in 3 and 2. I upped the contract numbers here to expire this Friday or this Monday, and that was a little bit risky, and I'll get into that in a minute. But as you can see, midweek I had $876 after these premiums come in. Here I can just put this in here. So once I get my collateral back of $300 on this trade and $200 on this trade, I'm at almost $1,000. I've almost doubled the account balance of this $500 within a month's time. And the reason I wanted to do this at 500 is to see, or is to show that it can be done with a small account. And one of the things here that I'm showing too that I'm doing is my wife's account, the $1,000 account that I set up that I showed you on my first video, my second video, is going to be traded primarily this way, just utilizing that whole $1,000. However, I have to unlock level 3 options in order to be able to sell spreads, in order to be able to trade these spreads here. Currently, I can only buy calls and puts on the account. So what you do, I'll show you how to trade this real quick. So in order to sell a premium, you choose an expiration date. Now, right now, because it's the weekend, Robinhood, you can't buy options or sell options that expire the same day unless you already own them. So it's going to push me out to September 2nd. And let's say I feel like the stock is going to do really well and isn't going to drop or anything like that. And I wanted to play it risky or whatever the case was. I could go with the 350. And what you would want to do is you'd want to sell the 350. Whoops, I've got it set on buy. Sell the 350 put. I got to switch it over here. Sell the 350 put and then buy back the $349 put, which is going to then give you the $177 that you're selling. So you're bringing in $177. And with options contracts, you have to multiply this by 100 because it's for 100 shares. So you would bring in $177. You would spend $140 on your protection, which would be a total credit of $37 into your account. When you hit continue, it's going to pop up and show the credit when you put in the number of collateral or number of contracts. And then, so see it's $37 here, review order, and it's going to say that I have to put up $100 collateral. Now we're selling to open and buying to open, which means these are positions that we're going into where the risk is on our side, so to say. But this, if you look at the numbers of 37 and 100, this is a 37% return on investment on this contract for 2 days. So as long as you're correct, the $37 is yours to keep. Upon expiration, you get the $100 back. Now, let me talk a little bit about how I actually put these into play. And a couple of things here. Let me go back here real quick. You can see I sold the 347s, bought the 346s, and sold the 349s and bought the 348s. Now, this is something that I just added in here, is the current stock price. And I wanted to add that in to know what the price was when I'm selling these contracts. So at the time that I sold this contract, the SPY was at $348.95. I was $2 out of the money almost when I sold this contract. And on Friday, the stock rose. As you can see, when I sold these two contracts, the stock was at $350.59, and I sold the 349 and bought the 348. So I made that a little bit more risky, but you can see I collected the same amount of collateral in both instances. And the SPY now, I'm gonna check the futures real quick and see what's going on with that. While that's loading, I'm gonna come back over here. So this is what I use to track my stocks with. It's called TradingView, and I know it looks a little bit crazy right now. I'll zoom in and show you what all these are here in a minute. But I like to find stocks that follow channels, and then this is a more volatile channel of the SPY here, which was a rebound from March all the way up, and then you can see it's been more consolidated here. It's not been as volatile through this area here, and as you can see, that there's not a bunch of stuff down through here. I wasn't trading it down here because there was such big bounds that it took. Like right here, this red candle went from 274 down to 265. And with me selling the contracts the way I do now, I would have been deep in the money if that had been expired that day, if it was a shorter term trade. Now from down here, it was way up here and it would have been fine. But the more volatility, the more premium you collect from your contracts generally, but also the more risk you take on. And I've got this lower down to try to make this look a little bit easier, but there's a couple of things I want to touch on real quick. I've talked about the EMA in one of my previous videos. And so the SPY's overextended here from the EMA. The EMA is down here at 327. We're up at 350. And so I want to bring this up as well. Volume has been dying down a little bit, which helps with the volatility as well. But when I bring this up, a couple of indicators that I see down here, you can see this box I drew on the MACD with the golden cross down here that we experienced, and then the stock came up from there. And then up here, the MACD with the death cross. Now, it did cross back here, but it immediately crossed right back. So we had the death cross here, and then the stock, came down from up here down to the bottom of the channel. And also here on the RSI, we were over sold down in this area all the way down, and then we came back up to the overbought area, and then we came back down a little bit. Now, right now, we're in overbought territory right here, and have been since the 21st of August, but we still have on the MACD, the blue is above the yellow or orange color here. So these are all technical indicators that I use to know, or not to know, but to try to evaluate my trades. as we go on. So I'm going to hide these now. I just wanted to point that out as a couple of things that I use when I'm trading. And then I want to zoom in a little bit here. So these boxes that I drew here, all these orange boxes are the spreads for trades that I've sold. So like right here, you'll see the three, oh, I didn't add that one in, but I got to add one in. But you'll see right here, this is the 347 and 346 spread box here. And for some reason, I don't know why I didn't put in the 349, 348, but I'll go back and put that in. But I always put these boxes in when I trade these trades. And these lines here that you see that I've drawn here, these thick lines, is a $6 window that I've put in because you can actually trade a condor, and I'll cover another video on that, and collect a little bit more premium with the same collateral. I'll do a whole nother video on that. I want to test that before I start trying to tell people about that or anything. So that's what all this is. But as you can see, it's a little bit difficult to see in this chart, but you can see I've got a smaller channel inside this larger channel, and it kind of hits the top or approaches the top, comes down, approaches the top, comes down, and now we're riding along this middle, then we come down, then we're coming back up, right? So we could come on up into the further ends of this channel, or we could come back down to the lower part of the channel. And so you have to watch the daily activities and stuff like that on a daily basis in order to know how to trade this. But there's also one thing too, is the SPY is affected by a lot of other stocks that are involved in the S&P 500, and also things in the market that happen. News in the media and everything affects the SPY a lot, and you can have big sell-offs. So I'm going to go to the 1 hour chart here and show you. So, and these lines are just when I was trading it throughout the day with different movements and stuff. So you can see some of these big candles. This is a 1 hour candle, and the stock went from 349.45 down to 348. So it made all that move in 1 hour, and then it closed down here, but then it opened right back up here on the 28th. So this was like closing day on the 27th, and then it opened up here on the 28th and came down. So there's a lot of movement that can happen within the SPY. And the one other thing I wanted to show you is my trades for this week that I've done, or not the trades, but the SPY puts that I sold, if it'll load. Right now we're looking good. The SPY is looking like it's going to open up. It is going to open up much higher, around 352. Now we'll have to see how the day trades because those contracts are there until the end of the day. Now what I can do is when these come in, if I want to play it safe, I can buy these back for $1, $2, whatever the case is, early in the morning if I wanted to. Plus I can do it to free up capital if I needed in order to sell more contracts. But right now I'm sitting at $418 available. So I can do 4 trades tomorrow based on this. And now that my balance on my account is a little bit higher on this, I'm going to start trading more contracts because more contracts is just more money, but it's also more risk on the table as well. So if you want to follow these trades with me, I'll be updating these periodically. Just like and subscribe, turn on the notifications so that you'll be notified whenever I post a video, and just be on the lookout for any updates of this. I hope that this video was interesting and gave some perspective about how to trade with a small account in a safer way, so to say. So if you have any questions, please post them below. Please like, comment, subscribe, share it with anyone that you think would get some value from this, and I hope that you enjoyed the video.